General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Alright, let's get to it. Middle of the week, so midweek anchor. I'm thinking this has a good chance to be the anchors. Wednesday midweek reversal profile, textbook ICT profile. Nice reaction. And we have us we have the order block to buy from. It's better than on Monday anchors. Weekly buys template, I'm thinking bullish for the rest of the week. No shift in framework, hit rate, been good, not picking tops and bottoms. And 2 case studies, no case studies. This is the monthly, so week 2, it's week 1, start of month, week 2. We reacted, this is actually May EQ, not previous month EQ. June, small range month, discounted June, bounced off at EQ of May. Previous month's low, it looks doable, but we're still kind of 50-50 right now. Price has expanded, but it's been choppy. Decision quality, high probability. Narrative framework / accuracy, better since I zoomed out. Experience success / failure. Showing up even when my hardware is not available. Case study part reference, real case studies. And today looked like accumulation, like he's accumulating more orders. Daily stance was engaged. Confidence level was medium. Wednesday, everything's confirmed. I'm looking for this to be Wednesday, maybe reversal. Timeless hit today. Thinking that was the low of the week, so I put yes. And every really could chop. Thursday, unemployment. Friday, we get SpaceX added to the NASDAQ. And SK Payments IPOs as well. So that's big for news drivers. Thinking this is lower, we can stay. New York didn't push us down lower. That's why I'm thinking this is lower to me. A lot of outran drama, and nobody cared. They kind of cared when it came out. And this is like, alright, right here is FOMC minutes, pointless data from stuff that we already got the information on. Here's the H1. it off of here, so order block over here. So these are our last two reactions, both off H1, H1 and H1. Where could we expect more selling? Probably up here. No displacement to the upside for a while now. So there's actually no displacement candles. This is the last displacement up. Yeah. So we haven't had a displacement up all week. Nice doji day. Nice, it's still up there. Kind of have a rejection block here. This would be the key of my watch, this daily fair value gap. Look for order pairing for sales or fill this gap. Look to target the top of this. Daily FVG will be the level of reference. If we reject, sell hard. If we accept, prepare for higher prices. As long as we below the wick, we are bearish. Take a look at SPX. Bounced off a daily fair value gap here. Kind of came back to the middle. These are a bunch of old newly opening gaps in the same area. No real delivery to the upside. It's sustained. Here. We also swept this low. Just holding in this area, which is crazy. Notice how we in these newly opening gaps from 2 and 3 weeks ago. The market is perfectly balanced. It should break out to the upside hard. We need speed to lead this PPR. Take a look at this. So this is a down close, which is interesting. Going up into here, we can look for sales, more sales, and we can actually look for buys here because this is a rejection block. We swept both of those lows. We grade this week as well. 2 new lines. Very short of flow, we can look for buys off the move from rejection block. Sales will have to happen from the top side wick. And the stock charts open lower. It's just this initial push down for the morning time. Trying to get that overnight low. Finish the rest of the day. Really headed for top side. And QQQ did the same delivery. But right here, I'm thinking this is the real turnaround. Us leaving this area, at least should double this move. This could be, fake out the lower buyers in and then pair orders. But I don't think so. We'll see though. Some thoughts the different road payout? Yes. What do we learn? There's no real big takeaway for the day. Tomorrow we're watching for unemployment. Cool. That's the chart work. Y'all have a good day. Peace.